Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 26th of July here in London. I'm Caroline Hitt.
And I'm Lizzie Burden. Coming up today, acts of sabotage hit French trains as the Paris Olympics kick off. We'll bring you the latest.
Sources tell Bloomberg that the UK Chancellor Rachel Reeves is leaning towards an institutional rather than a public sale for NatWest shares.
Plus, don't expect much small talk from your new colleague. JP Morgan introduces staff to its AI-powered research analyst chatbot.
Let's start with a roundup of our top stories.
On the eve of the Olympics, trains across France have been disrupted. The country's transport minister says the coordinated malicious acts targeted several TGV lines. It comes after a number of French websites were shut down last month in an attack believed to be linked to Russian intelligence. Bloomberg's Paris bureau chief Alan Katz says the perpetrators are unknown at the moment.
Honestly, we don't know. For the moment, these were physical acts. People have talked about fires on the tracks in local media. The transport minister who discussed it talked about, firefighters being on site for these locations. So it appears to be physical.
So that was Bloomberg's Alan Katz speaking there. A task force of 630 have been assigned to the games, but authorities worry non-traditional targets may also be in hackers' sites.
Now to earnings. Mercedes-Benz earnings plummeted 19% in the second quarter as sales of its passenger electric vehicles dropped sharply. Matters at the car maker were not helped by weakening demand in China. Bloomberg's Oliver Crook says the slowdown is sector-wide.
So this is really, for the auto sector, a quarter where it feels like the rubber hits the road. All the themes are still intact. There's nothing particularly new, but it's an auto industry where you have a very crowded market. You do not have the demand and you have fierce competition while they're still at the same time trying to manage this transition to electric vehicles.
Oliver Crook speaking there from Berlin. Only BMW, Mercedes' biggest premium car rival, has actually bucked the trend in Europe after rolling out several new battery models. The company is cutting back on electrification plans in preparation to spend more on its lineup of combustion engine cars.
In other earnings this morning, NatWest shares opened 9% higher after the company reported strong results. The bank boosted its full-year forecast by £1 billion as high interest rates provided a tailwind. The UK lender says it now expects its full-year income to be roughly £14 billion, up from £13 billion. Separately, the company announced that it was buying a £2.5 billion portfolio of prime residential mortgages from Metro Bank, and currently those shares are higher 7.2%.
And more on NatWest because the Chancellor Rachel Reeves is leaning towards selling NatWest shares to institutional investors rather than to the UK public. Bloomberg has learnt that the planned £5.6 billion share sale would come alongside the government's gradual winding down of its stake. Bloomberg's James Wilcock has more.
It's a relic of the financial crisis. The UK government remains NatWest's biggest investor after bailing it out in 2008. Former Chancellor Jeremy Hunt had wanted to sell large parts of that 20% stake to the public to try and encourage retail investors. But Bloomberg has learned Rachel Reeves is planning on taking some of that sale to institutional investors. The move may net the government money right as it faces a major shortfall in funds. Reeves is expected to lay out a near £20 billion funding shortfall for public services next week in an audit of the previous government's record. In London, James Wilcock, Bloomberg Radio.
Treasuries have held on to their recent gains as traders weigh signs of a resilient US economy against calls for quicker interest rate cuts from the Fed. This ahead of US inflation data today, with core PCE inflation, the Fed's preferred price gauge, expected to slow to near the Fed's 2% target on a 3-month basis. Former New York Fed President Bill Dudley is calling on policymakers to cut rates at their meeting next week.
I think rate cuts are definitely coming. I just think that at this point, there's not a really strong case for waiting. If the Fed doesn't cut in July and waits till September, it's not going to have a huge effect on the economy's trajectory, except the fact that when the unemployment rate starts to deteriorate, it seems to be a reinforcing negative feedback loop. Jobs are lost. People pull back on spending. That leads to further cuts in employment.
Dudley's comments were echoed by fellow Bloomberg opinion columnist Mohammed Al-Arian, who says too long a delay on cuts could prove a, quote, policy mistake. However, yesterday's better than expected US growth data, 2.8% on an annualised basis for the second quarter, has reinforced bets that policymakers will wait until September to kick off their monetary easing cycle.
And just lastly, JP Morgan Chase has launched a research analyst AI chatbot. The US banking giant has told its employees to use its own version of ChatGPT as a writer, idea generator and problem solver. It comes as many expect the new technology to create major economic gains and replace workers all around the world. Citigroup estimates that the technology could add $170 billion to the banking industry's coffers by 2028. That was cited in a June report, but it could also displace more jobs in that sector than in any other. OK, so those are our top stories and the markets. I want to just think a little bit about what's going on in France, of course. You've got all the excitement around the Olympic Games happening today, the opening ceremony at 5:30 London time. You've got thousands of athletes. You've got more than 300 gold medals up for grabs. There's going to be this huge flotilla going down the Seine, and you'll get all the sights of kind of Paris around. It's being broadcast all around the world. But then there are also real worries around security, and we've had this breaking news this morning that there's been disruption on trains in France, which is quite a worry.
Yeah, AFP reporting that this disruption could affect about 800,000 passengers, which makes me think about the potential economic benefit or cost of these Olympics, Caroline, because, we've been talking about the Euros and how perhaps Berlin didn't really get the benefit from the Euros. Do you need to think about these sporting events more in terms of the long term? And then there's also, of course, the cost. Paris desperately trying not to let the Olympics become a white elephant as previous Olympic Games have, and therefore using and retrofitting existing sports facilities where possible rather than building new ones, but still coming in over budget and still by no means cheap, not least because of those security concerns that we're seeing playing out with the trains today.
Yeah, absolutely. We're going to be discussing that in a bit more detail in a moment. Also, of course, you've got the NatWest shares increasing this morning. We'll bring in our UK government reporter Ellen Milligan on that because this is going to be, again, a major decision for Rachel Reeves. I mean, on Monday, the UK Chancellor is going to come up with exactly the size of the fiscal hole here in the UK. She ordered a kind of urgent review of the UK's fiscal position. We get the Bank of England rate decision next week too. So there'll be lots to kind of think about NatWest and the UK financial position as well as rate cuts potentially.
Yeah, we've been discussing it on the Bloomberg UK Politics podcast, haven't we, about how now that there's a new government in place, they're bringing out the dead, as it's called, from the different departments, kitchen sinking it, just trying to make sure that the narrative is fixed around these being the problems they've inherited before they start to deal with them, before they start getting the blame for these problems, not least when it comes to the public finances. So then we have Rachel Reeves making this speech on Monday, but also, as you say, as it comes to NatWest, taking a different approach, it would seem, from her predecessor, Jeremy Hunt. He wanted to plan to offer these shares to the public, but actually it looks like Rachel Reeves is going to lean towards offloading at least a substantial portion of the government stake in NatWest to institutional shareholders instead.
Yeah, absolutely. Let's then get the latest, shall we, on the train services being disrupted across France and also on the Eurostar. The French authorities have talked about it being a coordinated sabotage act. The Transport Minister speaking. Our EMEA News Director Rosalind Matheson joins us now for some further details. Ros, what do we actually know? Paris has also been on high alert for the possibility of any sort of disruption or attack.
Well, that's right. And the security in Paris itself has been exceptionally high in the run-up to the start of the Olympic Games, the opening ceremony tonight. But these seem to have been carried out outside Paris and a bit of a ring around Paris. We know there have been several fires that have been set in the north, the east and the southwest. Another one apparently was tried in the southwest to put a ring of fires around Paris, also targeting electricity transformers. And that's affected about 800,000 people with delays or cancellations from trains. That's trains within France itself, but also the Eurostar, both to Paris, and some delays on trains to Brussels. And we're hearing that's going to last at least through the weekend. So the question is, what does that do aside from disrupting services for people who are trying to get about within France? Does it affect the Olympics in some fashion? But obviously, someone's using the moment to gain maximum impact with a lot of the the world's attention on what's happening in Paris today.
Yeah, we were just talking about how the security bill has been inflated because of the uncertainty politically in France. But let's just talk about the cause of this disruption. We do know that there were a number of French websites shut down last month in an attack believed to be linked to Russian intelligence. Is anyone making a connection between that and the train disruption today?
At this stage, no, and there's no clarity about who may have been behind this or why. But there's been a lot of noise in the run-up to the Olympics about a variety of groups, shall we say, or people who have causes who want to draw attention to those causes. We're expecting pro-Gaza protests, for example, climate protests and so on in Paris. But as you say, we do know there was a cyber attack on a bunch of websites last month. The researchers who were looking at that tracked it back to hacktivists who are affiliated with Russian intelligence, and they're warning that there could be further risk of large-scale cyber attacks during the Olympics, again being such a high-profile event. They've been identifying all the groups and organisations who are critical to the functioning of the Games and getting them to check their systems, check them for flaws, for any vulnerabilities. So certainly we've had that. We did have news of a Russian chef in Paris who was arrested apparently for some sort of plans that he may have been considering related to the Olympics. So there's a lot of moving parts. There's always around these big events, but given just the global climate that we're in at the moment, we've got two big wars still on in Ukraine and in Gaza. We've got concerns about the cost of living everywhere. We've got concerns about climate change everywhere. And so there's lots of groups and parties who perhaps have an interest in drawing attention in some fashion to that during the Games.
Yeah, and the SNCF, the French rail organisation, saying that, pointing to vandalism and to fires being deliberately set, that according to their statement. I mean, France, I suppose, how much does it have invested in these games? I mean, obviously, so many people are going to be watching. There's a lot of political uncertainty. Emmanuel Macron seems to have persuaded politicians to put aside question marks over who's going to be prime minister and who's going to lead the government, at least until after these Olympic Games. It comes at quite an awkward moment politically.
Yes, indeed. That's exactly right. What we've got is this kind of backdrop of the political uncertainty in France. And as always with these things, they cost billions and billions of dollars. And then there's always questions about whether it was worth it in the aftermath in terms of does it leave the host city, Paris, in this or the country of France out of pocket. In the end, does the tourism benefit outweigh all of that, the infrastructure spending? So there's all those questions in the ether already. And then you've got the broader French political climate. Not really, we're waiting for the formation of a government, and those conversations have been going on, but not really getting anywhere, and have sort of now been put aside till after the Olympics. After that, we expect them to pick up and possibly get quite robust, shall we say, those negotiations towards a new government. So for Emmanuel Macron, there's a lot at stake here. He needs these games to be successful. He needs them to go off without a hitch. He needs everything to look good for France, for him as a whole. Obviously, for his own, reputation, there's a lot at stake here. And when he thinks about his forward legacy at the end of his own term as president, he wants this to be a moment. So for him, really, there's a lot at stake. But as soon as the games are over, the political games themselves are going to begin again, that's for sure.
All right, Rosalind Matheson, our EMEA News Director, we thank you. As AFP says, 800,000 passengers are going to be impacted on the French train network. But let's turn back to our NatWest Scoop. Shares soaring this morning, currently higher 7.5% after its results, boosting its full-year revenue as the lending giant continues to reap some benefits from stubbornly high interest rates. But also the news from our reporter Ellen Milligan that UK Chancellor Rachel Reeves is leaning towards offloading a substantial portion of the government's stake in the bank to institutional shareholders rather than continuing with her predecessor's plans to offer it up to the UK public. We could speak to our government reporter Ellen Milligan now. Ellen, hats off for the scoop. Why would Rachel Reeves want to take this different approach to Jeremy Hunt?
Yeah, so as you say, this was the brainchild of Jeremy Hunt, and it was very much kind of modelled. People would compare it to the Margaret Thatcher Tell Sid campaign that she used to advertise the sale of British gas shares to the public in the 1980s. So it's very much seen as like modelled on a kind of conservative, Thatcherite basis, which is quite different to, the Labour Party standing on these kinds of things. What we understand is that, this plan to sell the NatWest stake to the public has been put on hold since the election was called in May, and Rachel Reeves has been considering basically whether she considers it to be value for money for taxpayers. My understanding is that she's leaning towards an institutional sale to institutional investors rather than the wider British public, which she could spin as being better value for money. She's likely to get a better price, for example, and she could show confidence that investors have in UK banks.
Yeah, of course. And it also might save in terms of the rollout of such, a huge offering to kind of retail maybe. Why do you think the shift has happened? Is she trying to kind of, I suppose, what was she trying to show by this? Why do you think she made this decision now?
I think, she hasn't made a final decision on it. And I think it may take some time because they have spent all this time on this advertising campaign, spending quite a bit of money on it. And she is likely to maybe announce something soon, maybe wait until the autumn statement, for example. That's where Jeremy Hunt announced this plan. I think, as you said, NatWest had results this morning. Their share price is actually up quite significantly. And she may argue that you would get a better price selling it to banks, pension funds, etc., rather than the British public, where a retail offer would probably come in at a slightly lower price. And I also think it comes down to the politics of Labour versus the Conservatives. But also, I think this is a legacy of the Conservative government. And if Rachel Reeves wants to change tact, this might be one way of doing that.
Yeah, well, speaking of that legacy, of course, we're going to have a speech from Rachel Reeves announcing this audit of the public finances, expected to be pretty bleak. Do you expect there to be anything in there that we don't already know? It seems quite the PR job, and also a tactic that we've seen from previous chancellors, trying to blame current problems on the previous government to just get that out of the way up front.
So cynical, Lizzie, but I actually completely agree with you. She's expected to detail a near 20 billion funding shortfall for public services. But, readers of Bloomberg will know that's nothing new. The IFS warned, I think as early as March, that there was an 18 billion hole in the public finances, this conspiracy of silence among Labour and the Conservatives over the election campaign over that. So I'm not sure that the number is going to be new, but this is all about laying the groundwork for possible tax rises in the autumn statement and pinning that on the fiscal situation that Labour has inherited, i.e. it's out of their hands, it's the Conservatives' fault that your taxes might go up. Interesting that my colleague Jo Mays has been in Brazil at the G20 finance minister meeting with her, and she didn't reiterate her commitment that she had no plans to raise taxes on wealth, property or inheritance in Britain, like she was saying over the election campaign. She hasn't said that she might raise taxes, but she's not denying it in the same way she was a couple of months ago.
Yeah, the £30 billion hole, and whether it's really investment and growth that can fill that, or whether we do potentially see higher tax rates in the UK. I mean, in terms of what the timing of that might be. I mean, again, there's been quite a big debate about how quickly that might happen, whether it would come as soon as autumn, or whether there would maybe be a chance to see whether Labour's policies actually do create more economic growth. And economic growth does look to be quite strong, actually, by UK standards for this year and next year, 0.7%.
Yeah, I mean, UK standards is one way of putting it. They're quite low standards on economic growth. We've had a stagnant economy for many years now. So, yeah, 0.7% would be strong compared to other quarters. But, yeah, I think, and we've had this internal Labour row, for example, on the two-child benefit cap, which is pushing more and more children into poverty, and a lot of Labour MPs want to see that lifted in this budget or future budgets. So it's not just about public services that Rachel Reeves is having to grapple with. She's having to grapple with the funding needed for GB Energy that they laid the legislation for yesterday, for example, and also these kinds of decisions if they want to make, for example, about the two-child benefit cap. So she's trying to show that, I think, that she might not be able to do all these things because of the fiscal situation that they've inherited.
All right. Alan Milligan, our government reporter in the UK, we thank you very much for that scoop and the analysis of it. Let's get back to the US macro story. PCE data due later, the Fed's preferred inflation gauge, of course. And meanwhile, Asian stocks and US futures have been rising as swaps price in a Fed cut in September. Well, to digest it all and look ahead, we've got our managing editor for global FX and rates coverage at Bloomberg News, Rachel Evans, with us in the studio. Rachel, on top of the data, we've also had voices like Mohamed Al-Arian and Bill Dudley weighing in on when the cut should come. How does the growth and data and inflation data fit into that?
Yeah, well, this is going to be the last read that the Fed gets on the economy before they meet next week. So in that respect, it takes on kind of a greater importance than perhaps some of the data points to date. As you pointed out, this is the Fed's kind of preferred gauge of prices. And they've, obviously had some issues with sticky inflation over recent months. They do seem to be trending in the right direction now. So they're going to be very keen to see that is kind of going to be actually confirmed and continue to kind of go in that direction. And I think, that's really where the market has been at this week, debating whether we're going to see that data come out and give the Fed enough reason to cut. Obviously, you've had, as you mentioned, Dudley and Al-Arian basically suggesting that now's the time to go. And if they don't, maybe there could be a policy error there. But obviously, the Fed isn't necessarily going to listen to those guys. They're going to be looking at their own metrics, and they've made that very clear that is the data.
Yeah, so how relevant is the politics then when it comes to September, obviously with the US presidential election in November?
Yeah, I think, September is a little bit in that sort of intermediate zone. It's approaching the elections, but we're not right into the elections. Getting into a kind of a November sort of interest rate move right after the election could in fact be a little bit more difficult, because if you wait till November, then it looks kind of political, like you're giving, whoever wins a leg up. September does become a little tricky because I think Trump has come out and said that he sees kind of the Fed cutting rates before the election as being sort of positive to the Democrats. So clearly it can be politicised, and we know that sort of the Trump campaign has indeed politicised sort of interest rates in the Federal Reserve in the past. But I mean, the Fed is going to stick to its mandate, which is stabilising prices, full employment. There's no political part of that mandate. There's no requirement to kind of stay on hold while we're getting close to an election campaign. So it'll be something that's kind of at the back of their minds, but there's no real kind of reason that they can't go in July, September or November.
I mean, also politicising the dollar. In our interview with him on Bloomberg Business Week, lamenting the strength of the dollar against the yen. I do just wonder, when he says he wants to be a weak dollar president, but then he's running on this strong dollar platform, what you think he's actually going to do to the currency?
Yeah, this is a topic of a huge debate, as you'd imagine it, in currency markets. The general consensus at the moment is that kind of heading into the election, we're likely to see a stronger dollar. Obviously, there is more uncertainty. When there is uncertainty, people tend to flock to haven currencies. And the dollar has really kind of shown itself over recent years to be the ultimate in havens, particularly when you see some of the cross currents buffeting the yen. But when we actually get into the presidency, it becomes a little bit more doubtful. Tariffs would speak to a stronger dollar. Some of the more inflationary stimulus programs would speak to a stronger dollar. But obviously Trump himself has suggested that he sees the currencies of other countries as being too weak, and therefore, America as being not sort of sufficiently competitive. So the question is really sort of how that kind of translates to policy, and do they sort of pursue intervention, unilateral or multilateral? Do they come through with some policies that actually do weaken the dollar if they were to get into power? And that's still obviously a big if.
Yeah. Which of the other central bank rate decisions is going to be most interesting next week?
Oh, you're making me choose.
Yeah.
I mean, I think the Bank of Japan stands out.
Okay.
Just given we've seen kind of the yen rallying hugely over the past couple of weeks, I think everyone's watching to see if the Bank of Japan delivers and actually hikes interest rates. That's kind of been the sort of premise for some of this huge unwind of yen shorts and this big rally in the yen. So they kind of need to stand and deliver. Otherwise, a lot of that rally is going to unwind just as rapidly as it emerged.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.